Hey traders, Raghee here. In this update, we're going to go through a number of commodities that are on my radar. We're going to kick it off with a look at some metals. We're going to take a look at gold, silver, and copper. We're also going to jump into a little bit of crude oil, as well as bonds, and then we'll wrap it up with the indices. So a number of markets to take a look at. Let's go ahead and get after it. Starting off with copper. Copper is a really interesting metal because it's not quite a precious metal. It's not going to move necessarily with gold, and it's not necessarily silver. Silver is an interesting mix of a little bit of a precious metal behavior, but also there are manufacturing application. So this is where copper and gold are the best way to understand what silver is going to do next in terms of which one is it tracking with. Would I like to be long copper? Absolutely. There are a number of reasons that this is more bullish, probably the most simple of which is we are above the 200 propulsion. All right, neutral market. It is right now a little overbought, but any kind of move down to our daily price movement range or even the 200 propulsion would be a fantastic zone for a buy. I'm looking for a pullback on copper to buy into. Now, is silver moving with copper? Silver looks a whole lot more like gold. I do have a long position in silver with the good folks over in the Sector Secrets Mastery, and we're continuing to manage this position. We did hit a high of 25.43 here. I'd love to see silver follow through to about 25.70 and see if we just can't continue higher with a green trend. The path of least resistance is indeed up, right? So I'm looking at the multi-trend at the bottom of the chart. Ditto gold, right? Green multi-trend here at the bottom of the screen. Would love to be a buyer. We bought gold once before in the DPMR. Would love to do that again. That previous buy in gold was as we sunk down into this area. Let's go ahead and wait very patiently for a test around that 2000 level for another buy in gold. This is buy the dip, gang. And if you're a fan of the 21 exponential moving average, the 21 propulsion is in there. What's the difference? Well, the 21 propulsion uses a moving average cross to light up the dots, and the 21 EMA would simply be that exponential moving average. I like the propulsion. It's a smart, self-correcting EMA. It's sitting around 1994 right now. Would love to be a buyer in gold. That gets us through the metals. All right, what about treasuries? What about the long bond? Long bonds really in an interesting situation where we are expecting a rate hike, and frankly that's probably largely been factored in. So remember, bond yields are actually moving higher as the ZB futures move lower. So this is really indicative of higher rates as we move lower. And if we're getting that May 3 rate hike, which we very likely are, and if we get another rate hike, which is not the dominant psychology that's factored in, but it's possible for the June meeting we get another quarter point hike. It's just possible. The hold is more likely, but there's still a little bit of lingering hawkishness. One more quarter point hike or two. And that's where bonds are sort of in a little bit of confusion, which is how much more hiking, and then at what point, whether that be November or September, do we start to see the Fed pivot? Would I be a buyer in bonds as we get down to the bottom of the range? Absolutely. That would sync up very nicely with DPMR support and our slow stow getting down to the low. All right, so that's the metals. Treasuries, let's go ahead and bring it on home with what's going on in the indices. Do I want to be a buyer? Gang, this is about as clean a look as we're going to get, right? When we start to see indices, especially after the regional bank crisis, something like S&P, where the number 2 weighted sector is financials, when we start to get here in mid-April, that nice green structure, that nice uptrend, yeah, you better believe I want to be a buyer in the lower part of the range, the support of the DPMR. Now, this is falling in line with what we're seeing with the NASDAQ, which has been in an uptrend. It did not give a rip about what was happening with financials, only in sort of the risk aversion that affected all sectors when the fear hit. But as a general rule, I'd like to be long NAS. The trick is going to be, how does Apple, how does Microsoft, Google, Meta, how are the earnings in Tesla Can we see support and then follow through? And that's just another reason to wait for something closer to 13,000, which really, look, give or take 200 NASDAQ points in a daily time frame in terms of historical volatility, it's absolutely nothing. This is definitely a buy the dip environment. All right, the Dow is where things get a little bit more interesting because the number one weighted sector in the Dow is the XLF. And so it's no surprise that this is struggling to pick up into an uptrend, but that's okay. I don't need an uptrend to buy the daily price movement range. It would basically be a buy in the white zone, and then what I would look to do is take advantage of taking profit closer to the yellow zone, right? And this is where we would scale out. Now, frankly, if that was what has been done, take a look. That's a buy, right? That's a buy. And we're just looking for another opportunity. Every one of those has been, as you can see, giving us very nice follow through. So even though we don't have a trend, it's still something we can buy because it's a volatility support level. If you haven't checked out the DPMRs yet, you're going to want to do it because they are working very well in CHOP, which is what we continue to deal with. So if you like a 60-minute time frame, if you like a daily time frame, heck, if you like a 30-minute time frame, these DPMRs are still going to give you a very clear automated zone from which to buy, right, when we reach that level. So is it going to be something we'll see a lot of? No, this is a very slow moving type of look. If you want something a little bit quicker, okay, Rog, maybe I want to be a little bit more of a day trader, but maybe not a 5-minute chart. No worries. You can take any one of these charts, throw it on a 30-minute time frame, a 15-minute time frame, and start looking for the hourly price movement ranges. And I don't do this personally myself a lot, but I get this question quite a bit. Rog, can we be buyers? Can we be short sellers using the hourly price movement range on a 30 or a 60-minute time frame? Absolutely. Why, gang? While I have my preferred time frames, a lot of people do. Remember, there's two things that all my indicators must be. One is universal, right? They must work on everything. The only sort of criteria is it be liquid. The next criteria is it be robust. That means it works well. So it must work on everything. It must work well. So I can easily use an HPMR in a 5-minute time frame, but those of you that want a quicker type of entry, say in a 30-minute or a 15 or a 1 hour, here's your hourly price movement range. Something to think about. I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.